Good morning from London. I'm Guy Johnson. I'm alongside Tom Mackenzie. We are now an hour away from the opening trade. So what do you need to know this Monday morning? It has been confirmed within the last few minutes that Honda, Nissan and Mitsubishi will hold a news conference 1 hour from now. The three firms are expected to announce that an MOU has been signed today that will lead to a full merger agreement in June. We'll have the latest on that in just a moment. Will France have a government for Christmas? Prime Minister Francois Bayrou is struggling to create a cabinet that can survive a confidence vote. And Slovakia's Prime Minister Robert Fico meets Vladimir Putin in Moscow in a last-minute effort to keep Russian gas flowing through Ukraine. This ahead of a January the 1st deadline that will likely see Kyiv cut all supplies, Tom.
Let's check in on the market action then after we had the PCE gauge, which we know is of importance to the Fed, coming in at the softest pace of growth and expansion for that gauge since May. That left a lift to US equities by the close on Friday. You saw gains of more than 1% across the S&P. You've had a gain as well and a decent session across Asia, largely the handoff from the US, but also some commentary in mainland China from the premier there around building out semiconductors, and some investment decisions as well and implications from Nvidia in Taiwan. European futures, though, currently pointing lower by 0.2% after 2 straight weeks of losses for European stocks. FTSE 100 futures also a little flat, soggy, pointing lower by 0.1%. The US 10-year currently at 4.52 on the benchmark. Euro dollar back above 1.04, but for how long is a question. The countdown to the opening trade starts right now.
Monday morning, good morning. Actually, there's a lot going on. I know it's a couple of days before Christmas, but we have plenty of news flow that we need to digest this Monday morning. I want to start with what is happening in the car space. 1 hour from now, 58 minutes from now, we are expecting that we are going to see a press conference coming out of Tokyo. It's going to be led by Honda. Nissan is going to be there. Mitsubishi is going to be there as well. The expectation is that we've seen an MOU being signed today, a memorandum of understanding that ultimately will lead to a full merger between these firms that will likely happen sometime next summer. We're thinking June is the logical time. This, of course, comes after we saw the agreement Friday between Volkswagen and its unions. We'll come back to that in just a moment. But, Tom, this feels very defensive.
It feels defensive, but it feels like, in terms of optionality, where else do they go?
Yep.
Given the challenge that Nissan has faced, some of that is idiosyncratic. Some of that is down to missteps by the leaders at Nissan, is the argument that's being made. But the other story, of course, is the threat that so many other automakers are making and feeling, from the competitive threat from China to the cost of shifting, of course, away from the combustion engine. So in terms of the choices particularly facing Nissan, very limited, a combination of Honda, Mitsubishi. The timeframes you're talking about are interesting, aren't they? So you get an MOU agreed by June of next year, and then potentially you have that full merger by 2026, with all the question marks around, of course, labour and how you integrate these businesses, and still with a market cap combined of below Honda. Will it set these businesses up better to compete?
Toyota,
yes.
I think the parallels with Europe, though, are fascinating. And these are companies that are facing the same challenges, legacy businesses that are finding their way, they're finding their feet, trying to figure out how to deal with the EV challenge that's coming out of China. Similar problem that we're seeing at Volkswagen. We saw the agreement with unions Friday. In some ways, that doesn't save enough money, you would argue, to put this firm kind of back on a really firm trajectory. But as some of the brokerages have been saying, it's a good first step. But these are the similar challenges that we're facing in Europe. How much more consolidation do we need to see? How big does this grouping within Japan need to ultimately become? Can they really fend off what is coming out of China? Can they compete in China? I don't know whether this answers those questions at this point, and I don't know whether Europeans looking at what is happening in Tokyo today will see an answer for them either. Sharing
costs, sharing platforms, and it becomes a question. The Chinese market, where they can compete in the Chinese market, is really key, isn't it? And there would be many who are looking at just the innovations being built out there, saying that essentially the market share of these businesses in China is just going to dwindle. And the key question is whether they can defend their market share China, and the cost sharing, the partnerships and sharing these platforms going forward could be.
We'll bring you that press conference. We'll bring you the details, folks, of that press conference when it comes. We think it's going to happen at the top of the next hour. We'll obviously cover that for you and bring some analysis. Craig Trudell, head of our Autos coverage, is going to join us on set to make sure that we're fully up to speed with what is happening there. Just want to flag as well that Volkswagen is up, we think, circa 3% on the Tradegate platform right now. So it looks like the market is going to receive fairly positively the news that we got after hours Friday on this agreement with unions. Let's turn our attention now to what is happening in France, or not happening in France right now. François Bayrou is really struggling to form a government.
He set himself a deadline. Of course, this was one that he set himself. He's not restricted by it in any legal sense. To have that cabinet approved, or at least lined up, then with some approval and backing from Macron by the weekend. Now we're hearing from reports from French media it's going to happen Monday at the absolute earliest. That sounds like it will be a challenge. He wanted to get it done, obviously, before Christmas.
Well, I think the new deadline is Christmas, so Christmas Eve. So it looks like Tuesday night is going to be the new deadline that they've set themselves to get this across the line. But it looks like they're really struggling with the socialists to get some sort of an agreement that would allow this government to have a little bit more longevity than the previous ones. Remember, this is the fourth government we've had in France this year.
And the play had always been from Macron and his selected premiers to try and prize off the socialists from the rest of that leftist grouping. And so far they haven't managed to do that. But he had a pretty constructive conversation, it seems, with Marine Le Pen and Jordan Bardella of the right-wing National Rally. He's been reaching out, as you say, to the socialists. And he suggested that he would even remove the reforms around the pension age, of course, that was so controversial, that kicked off those protests. What more is there to give from the Premier, Bayrou, to get the backing? He needs a cabinet, but he needs a cabinet that's going to be supported, of course, and not face those censure votes.
You do wonder whether Emmanuel Macron can really survive another collapse of a government. As I say, the fourth this year. If this one collapses, we've got to wait until 2027, in theory, for the next presidential elections. But if we continue at this rate, A, there's not many prime ministers left that he could potentially pick, and B, the pressure is going to mount significantly, therefore, to have presidential elections at some point early, as we've kind of seen in Germany. But I wonder whether that's going to be a story for next year.
How sustainable Macron actually is, given that 2027 time frame that he's got, whether he actually gets to the end of that. On the markets then, the inflation data, the PCE gauge, interesting because Bloomberg Economics had flagged it was likely to be a little softer when you peel in all the different components that had come through. So they weren't entirely surprised by it, but the markets reacted. And have started to kind of increase their expectations around bets, more than 30 basis points now, so a little over one full interest rate cut priced in for next year by these markets. And certainly the equity market's got a lift in the US. European futures don't seem to be picking up much from this story. What do you make of the kind of market reaction to that, Gage?
So I'm not going to read too much into it. I don't think there's actually much you can read into it. I think we need to see more data. The PCE was a little soft, but not that soft. The indications are that the bar is very high now with an economy that's booming. The data delivered last week showed that this is an economy that's continued to boom. And I think that's going to be the story. I think we have to wait until we see what Trump ultimately delivers next year before we get an idea of what is happening. The story for me Friday actually was still the Novo Nordisk story. And I think the fear there, you look at that story, and is that the warm-up act to NVIDIA? Like, here is a stock that's been such a darling, expectation has been hyped to such a degree that you then get what feels like a relatively minor disappointment, and you get an exaggerated stock drawdown. Is that what ultimately awaits NVIDIA? Because that's got to be the fear that's stalking the market post-Novo Nordisk into the AI trade.
You heard the gasps in the newsroom when you saw the stock falling on the back of those disappointing results. And as you say, there's some parallels, right, in terms of how executives have communicated around their expectation for this new drug and how it will help them position them against the competitive threat of Eli Lilly. NVIDIA, though, does not face the same kind of competitive threat in terms of
at some point
its
it must
contenders. At some point, but is that a 2025 story? Versus
Maybe.
Novo Nordisk now, that's clearly a here and now story, isn't it? Arguably, NVIDIA, that's a little further down the line.
It is further down the line, but I don't know. But is this the kind of the pre-shock? Does this, in the back of your mind, as somebody that's got a big position potentially in NVIDIA, say that is the kind of thing that will happen, given elevated expectations, were we to see any kind of disappointment coming through for NVIDIA or any of the other kinds of stock, Broadcom, etc.? These names are on such elevated kind of expectations that any kind of a miss will drop us down. The one thing we didn't get, which could have caused us a lot of consternation this Monday morning, was a government shutdown in the States. So you can take that off the table for now. But I think US political volatility is going to be a fairly substantial theme. And we've got some great guests lined up that we're going to be discussing just that. Charu Chanana, Saxo's chief investment strategist, is going to be joining us a little bit later. We'll get a conversation around that political volatility. Fabrice, Pothier, Rasmussen Global CEO and former senior advisor to the Nato Secretary General, is going to be joining us. We'll talk about what happens next. He's got a plan for maybe resolving what happens in Ukraine in 2025. We need to talk about this gas story as well. Charles-Henri Monchau, the Seas Group CIO, is going to be talking us through the market story going in at 8 o'clock. And Carten, Brzeski, ING's global head of macro at ING, joining us a little bit later on. We're looking forward to that conversation as well, Tom. In a weird way, normally this week is super quiet, but there's a lot going on.
As you said, thanks to the news gods of Japan. So the corporate story around Nissan, Honda.
But I don't think it's just them.
No. Markets working through what's happening with inflation.
Yep.
The lines. I mean, where did that story come from? I mean, the Panama Canal. I mean, where did these stories just kind of get planted in Trump's mind and he latches onto them? I mean, was this a briefing from one of his advisors, and suddenly this has become his new kind of bête noire, his new kind of thrashing subject? Is the Panama Canal, and quite a robust response from the leadership over in Panama. So that's a story we'll get more details.
This China story, this NPC story, are we expecting anything out of that?
It really comes... So the details come in March. I mean, we watch for anything in terms of the hints, the rhetoric, the language, the statements in Xinhua News Agency or CGTN, the state media, for anything that gives us more details in terms of the ambition of Chinese policymakers to address the slowdown. But really, the concrete details will become with the work report that's released on the first day of course, the two sessions. So
we've got that to think about, as you say. Maybe that's something that comes a little bit later. US consumer data is going to be released as well. We're looking for the confidence data. That's going to be coming out Tuesday, Christmas Eve. I don't think anybody's going to be really focusing on US durable goods. We've got markets closing early, both here and over in the United States. Wednesday, just to really spice things up, the Japanese news gods. The Bank of Japan's Ueda is going to be speaking. Thursday, jobless claims. Friday, Tokyo CPI, and we will basically be looking forward to what else is going to be coming. Tokyo feels like it's the epicenter of the news action, maybe coming through.
It is right now.
Over the next few days. We'll go there very shortly. What else do you need to know this Monday morning? Let me walk you through some of the other stories that you want to focus on as well. The Slovak Prime Minister, Robert Fico, has met the Russian President, Vladimir Putin, during a rare visit to Moscow by a European leader. Fico said the two discussed the looming end of a Ukraine-Russia gas transit agreement that will likely end on January the 1st when Kyiv shuts down all supplies. The current agreement allows around 15 billion cubic metres of Russian pipeline gas per year to be shipped to a number of European nations, including Slovakia and Hungary. A senior leader from Chancellor Olaf Scholz's party is calling for an antitrust act to limit the influence of Elon Musk. Dirk Weiss told Bloomberg the act would lead to a breakup of Musk's companies, which he called monopolistic. The world's richest man triggering controversy last week when he voiced support for Germany's far-right AfD on his social media platform X. Musk also called for Scholz to resign after Friday's Christmas market attack. And Panama's president, as Tom was saying, has rejected Donald Trump's threat to reimpose American control over the Panama Canal. The president-elect claims the waterway has fallen into the wrong hands and that US vessels are being charged exorbitant fees.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete rip-off of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Nobody saw this one coming. Another surprise being delivered by President-elect Trump, who is certainly upending global politics in a fairly substantial way, alongside Elon Musk, Tom, who causing controversy in the UK and in Germany. He's also just been tweeting within the last few minutes, and this is actually a tweet. We can still talk about tweets. The Fed is absurdly overstaffed, according to Elon Musk. This just looks like it's going to... This, again, feels like something that is setting up what the market is fearing for 2025, and that is potentially a fight between the White House and the Fed. And I think that would be something that most investors would not take kindly to.
So a couple of themes, two key themes. One is the question of the Fed independence, and whether or not Jerome Powell, who's insisted that he's going to run out his course, of course, and legally he has the safety and measures in place to do that. But the other part of this is, as you say, understanding that a key theme for 2025 and beyond will be just the whiplash that markets will have to embrace, or at least face up to, when it comes to both Trump and Musk, it seems, not just their domestic ambitions, but their external ambitions as well. And as you say, Panama Canal seemed to come out of nowhere. You saw the crowd cheering as though this was top of their mind in terms of what they wanted to latch onto. But, you know, is this a question of Trump, who is positioning to force a better deal on tariffs, on the fees through that canal?
Sounds like it.
Or is it concern that China has a couple of locations too, it seems, on that canal that he's concerned about, or both? But this is going to be a theme, not Panama necessarily, but a theme through 2025.
Just put it
taking aim at different parties outside and inside the US who they have an issue with.
So you've got Mexico on the agenda, you've now got Panama on the agenda, Canada, consternation in Canada right now as we watch what's happening to the Trudeau government as well. There's a lot going on. He's not even in office yet. Heaven knows what's going to happen in January.
And you touched on Musk endorsing the AFD. Again, you talk about consternation in Canada, rightly so. Consternation in Germany around the tongue lashing that Musk has taken out in terms of Olaf Scholz and other parties, and putting his support behind the far-right AFD. At a time, of course, when he's looking potentially at funding the Reform Party here in the UK as well. So bracing for more political shockwaves coming from Washington and Elon Musk. Coming up, we're going to dig into the AI story. And Guy's been talking about the fact that the Japanese news gods are serving up some decent lines today. SoftBank, the details around Masayoshi Son pinning his hopes on trying to take on Nvidia. That's coming up. Plus, looking at the latest in terms of the autos merger and the talks in Japan, with a press conference, an announcement coming up in around 45 minutes' time. We will bring that to you live, of course. Up next, though, the Fed's Mary Daly says she is still comfortable with 2 rate cuts next year. We're going to check in on how the markets are positioned. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought.
San Francisco Fed President Mary Daly talking to Bloomberg Friday. Last week was a big week for the Fed. We saw obviously the Fed shock, the markets readjusting, trying to figure out what exactly the trajectory is looking like from here. Maybe that trajectory is higher for longer. Are the markets really ready for that? Have we adjusted to that? Charu, Chanana, Chief Investment Strategist at Saxo, joining us to discuss. What do you think? Have we adjusted to higher for longer, or do you think there's further adjustments still to come?
Hi, Guy. Thank you for having me back. I do think, there's going to be quite a bit of adjustment to come into 2025, because if you step back, look at just the biggest drivers for markets in 2024. So I think they were pretty broad-based. We had the Fed on an easing cycle that helped equity markets really register that valuation expansion that they were able to do. We had a strong earnings story, some mega trends like obviously AI, which I would say continues to run, but it changes the dimensions from here on. And the third and the most important relevant factor that we've seen in the recent months has been that US election and the Trump victory that has just propelled markets to new highs, right? Now, going into 2025, of course, the Fed is changing its trajectory, and that is something that markets will need to register, whether we can get the same amount of valuation expansion, the multiple expansion that we got in 2024 or not. So I think the earnings side of the story will have to really lift this a little bit, stronger. And then on the Trump side as well, I mean, we've had this great momentum to start with, but going into 2025, the action plan, the real story will get to implementation. Whether we get tariffs first, do we really get tax cuts in H1, or is that more a second half 2025 story? And when you get tariffs, is this really positive for equity markets? I would doubt so. So I think a lot of volatility to price in from here on, whereas the trajectory could still be upwards. There could be obviously a lot more bumps in the way as well.
Charu, can I add an extra element of volatility into the mix and come back to the Fed story? Do you think Trump, do you think Musk are going to be okay with higher for longer? Do you think we're also setting up for a Fed fight between the White House and the Fed?
Well, that was my first reaction when I woke up to the Fed meeting announcement last week, right? And what has Jerome Powell done? Has he, put himself into a really difficult position going into 2025? I mean, of course, Fed wants to establish its independence. And this is really the relationship between the Fed and the government is something really that I cannot even comment on how it goes from here, at least on the surface of it. But it does seem like this is something that will be concerning investors again. And uncertainty is never good for markets.
Charu, where does that leave your expectations then? I mean, the dot plot's being reined in from four to 2 in terms of the forecast from the Fed. Market's now pricing in about, 33, 34 basis points by the end of the year. I mean, how much weight can we put into those forecasts given all of those uncertainties you flag, whether it's tax cuts or tariffs?
Well, I would say we should never put a lot of weight on the dot plot, right? It has hardly proven to be accurate. So again, I think the only thing that this changes is the mindset that you go into every Fed meeting with. So over the course of 2024, the mindset was that the Fed is going to cut rates unless we saw an inflation overshoot, unless we saw, labor market coming out very strong, which didn't quite happen. So it was easy to get through those rate cuts. But going into 2025, I think my mindset for every meeting would be a little bit different. To start with, it is going to start from a fact that we will not get a rate cut unless really the data demands it. So has inflation moderated significantly over the last 2 or 3 months? And that's potentially a reason for them to cut rates. Is the labor market unemployment rate really showing signs of, concern here? And the Fed should respond to it. So certainly it is not a data dependent Fed, but a data trend that will matter more here. But again, I think whether it's 4 or 2 or 3, it's hard to say, but it will be a mindset shift that you are not potentially going to get a rate cut as often as we got in 2024.
And you talked about the need for earnings to be supportive, or at least earnings to come through with some pretty decent numbers to kind of support the gains that we see in the equity markets, and you tie into that AI. You see that continuing, but the dimensions of that story adjusting. Talk us through the contours of the AI story and how that evolves next year.
So I would say, 2024 was really the broad-based beginning of that AI trend that we saw, and the focus was primarily on the chip sector because they were considered to be the shovels in this gold rush, and rightly so, they've delivered. NVIDIA has delivered, obviously, massive returns, but that has not been the only story. Specifically, if you look at the last quarter of 2024, we've had a lot of software companies really delivering very strong results. Some things of the likes of, Snowflakes and, Palantir has obviously actually even overtaken NVIDIA returns from a year-to-date basis. Broadcom has really caught up with NVIDIA as well over the last few months and quarters. So I would say the story is evolving. I do think the chips remain very, very important. And as of now, NVIDIA is facing little competition in its way. So it can continue to be the leader. But on the other hand, there's these software companies where you actually see that application of AI being delivered, which is where the valuations are not as expensive as in NVIDIA. So those can also start to participate in this AI trend a lot more.
Charu, do you think what we saw with Novo Nordisk on Friday is a little warning for what could happen to stocks like NVIDIA?
Certainly, valuation played a big role there as well. The trial that Novo Nordisk did not perform as per expectations on, it's something that is heavily linked to the expectations of the stock itself, of the company itself. So certainly NVIDIA faces the same threat, but whether or not that comes in 2025, like I said, right now their Blackwell chips, the demand is certainly outpacing the supply. So in fact, they, on the contrary, have an issue whether they can supply that kind of a demand or not. And again, that becomes a threat if you cannot deliver because expectations are massive. But as of now, from a competition lens, I don't see any real threats to NVIDIA's dominance as well.
Okay. Charu, great to catch up. Happy holidays. Thank you very much indeed. Charu Chanana, Chief Investment Strategist, joining us from Saxo. Up next, we're going to talk about NATO. We're going to talk about Ukraine. All of that coming up. This is Bloomberg.
Welcome back. We are 30 minutes from the start of the opening trade this Monday, December the 23rd, of course. Donald Trump, meanwhile, is already sending shockwaves around the world a month before taking office. The US President-elect's trade threats and diplomatic efforts are causing turmoil in the likes of Canada, Europe, Ukraine, the Middle East and China, leaving leaders scrambling to respond. Here for more is Bloomberg's Bill Faries. Bill, what is remarkable is how quickly and swiftly the politics of countries like Germany and Canada have adjusted to the incoming President-elect Donald Trump. Before he's even, of course, in office, Justin Trudeau, for example, seemingly on thin Canadian ice, politically at least, and Germany's new government and, of course, the collapse of the government there, arguably partly as a result of trying to adjust to those potential threats. What do we know in terms of the wrecking ball or the remoulding, at least, of international politics, thanks to Trump so far?
Well, yeah, you're only a country is only supposed to have one government at a time. But at this point, it seems like Donald Trump is exercising almost more influence over geopolitics than Joe Biden is, even though Trump has about 30 days or so before he takes office. He is absolutely shaping the debate in countries from China all the way through Europe, and now, as we saw over the last 24 hours, in Latin America with Panama. The big lesson learned here, I think, for countries as they prepare for Donald Trump's inauguration on January 20th is to be prepared and have a plan B. Whether you are a close ally of the United States or a rival like China, there's a good chance that you might come under his gaze and he might propose revising something that you thought was quite taken care of already. So I think that's the case with Panama, which I'm sure none of us expected to be discussing this week. But it also goes for countries like Europe, like Denmark, for instance. Earlier, it hasn't been talked a lot about, but Donald Trump said that it's in the U.S. imperative to control or own Greenland. So I think he's taking a wide range of controversial positions on the world, and I think that's only a signal of what's coming after January 20th. Yeah.
Bill, the joke that's doing the rounds now is, though, that it's Elon Musk, not Donald Trump, that ultimately will be the president of the United States going forward from here. He certainly seems to be having outsized influence at the moment. And we get more of that this morning in the form of a tweet coming from Elon Musk talking about the fact that the Fed is absurdly overstaffed. A, what do we make of this? And B, is this the setup for the fight that markets will be really worried about in 2025? And that is between the White House and the Fed.
Yeah, absolutely. I mean, the key thing about Musk here is of course, he's close to Donald Trump and is having a big influence on his policies as he forms the government. But remember, Trump is going to be the head or co-head of this so-called Department of Government Efficiency. One reason Donald Trump picked Elon Musk for that, he said, was because he likes how he manages his companies, in particular X, and his layoffs at companies like X after he takes control. So if you're at the Fed and Elon Musk is saying that you're overstaffed at this point, that is certainly going to be the view presented to Donald Trump. And you have to start wondering, when you have these debates about the Fed's independence, if that's something that is going to be increasingly scrutinized under a Trump White House.
Bill, great to catch up. Thank you very much indeed. Bloomberg's Bill Faries on what the latest is coming out of Donald Trump and the consternation it's causing around the world. Let me just add into that. The FT is reporting that Trump wants European NATO members to increase their defence spending from, get this, 2 to 5% of GDP. It's been a struggle to get to 2%. He will, though, we understand, continue to supply military aid to Ukraine, i.e. to maybe position that country for a peace deal, but on the front foot. Attending a mini-summit in Finland on Sunday, European leaders discussed common security challenges as they prepare for Trump to take office. Joining us now to discuss all of this, Fabrice Pothier, CEO of Rasmussen Global, former director of policy planning at Nato. He also serves as an advisor to the Ukrainian President Volodymyr Zelensky. Good morning. Thanks for your time. Is 5% possible?
Well, actually, by every assessment, Europe, to fulfill the requirements of defending itself, to basically be able to execute the NATO plans to defend the NATO territory, Europe would need to spend between 3 to 4%. So I think 5% is not so far off. It's probably a negotiation position. Trump is a deal maker. He likes to put pressure, but I think we're probably going to land something closer to 3% by mid next year at the Hague Summit.
Yeah. Does 3% get the job done? Is 3% possible? What has to give in a country like Germany for 3% to be a realistic target in terms of defense spending?
It might sound crazy, but 3% is, I think, just enough to get started into something more serious. When you look at the kind of requirements we have, the kind of where we have how many flanks NATO has to be able to defend, and the kind of capabilities and capacity you need to mobilize. Whether it's going to happen, the problem is, even if you hit the symbolic 3% or 3.5, that doesn't mean it translates into your armed forces. That doesn't mean you have your soldiers, you have your tanks, your fighter jets ready to be deployed. And this is where, for example, a country like Germany, even if they hit 2.5 or 3% by later in this decade, might not have yet the forces that are required to really contribute to NATO's defense plans. So I think this is where it's not just about the spending target, but also the how you spend and where you spend. And this is where I think Secretary General Rutte is onto something when he's putting the focus really on the NATO defense industry and how much output we can get out of our both American but also European defense industry.
And Fabrice, you're still close. You still have sources, of course, within NATO. Is it your expectation? Are they preparing, are they girding for a ceasefire next year between Ukraine and Russia?
I will not comment on that. I will think that the focus for NATO, which has just taken over last week from the Rammstein mechanism as the lead coordinator, I think NATO is and should be focusing very much on how to help Ukraine defend itself and regain some form of, I would say, at least stability on the front line. And I don't think NATO will want to kind of dabble into peace negotiation in terms of the peace negotiation. The bottom line, NATO's contribution should be to make Ukraine as strong and as capable as possible, and then leave to the Ukrainians the decision on the terms of these negotiations.
One take from the incoming Trump administration's view on Ukraine is that it's going to be disastrous for Zelensky and Ukraine. Is that the right way to think about it? And how do you characterise the Biden administration's policy in terms of success and failure?
I'm afraid it's not the right way to characterize it. I think first, instead of trying to Trump-proof our policies in Europe, we should make as many policies Trump compatible as possible, because we're going to work with the new occupant of the White House for the next 4 years. That's, I think, a reality we need to accept. Second, if you look at the Biden administration's, I would say, legacy on Ukraine, it's a pretty mixed bag. You have indeed the capacity to have brought together the allies and to have some real unity, but it's unity for something relatively weak, or at least not strong enough to allow Ukraine to defend itself properly and to regain the ground it needs to regain to have a long future. So I would think actually the incoming Trump administration, I don't think has a real fully formed plan yet, but there's some interesting instincts. I think the notion of trying to end this war is something that I think the Ukrainians would be the first to share. And the second notion of injecting leverage and strengths into triggering some negotiations, especially leverage and pressure on Russia, I think that's the right kind of approach that has probably been lacking on the part of the Biden administration.
Fabrice, how can Ukraine rely on Europe when Europe is so fragmented in its approach to Russia? Robert Fico, Slovakian Prime Minister, in Moscow this weekend, talking about gas. The Hungarians and the Slovaks still want Russian gas and are still prepared to do deals with Moscow.
It's a difficult political picture, but there are also some, I think, some stronger elements here. You have an unusually aligned, strong leadership in Brussels between the President of the European Council, the President of the European Commission, and Mark Rutte. 3 of them are transatlantist. 3 of them are recognized and accepted as leaders among the Europeans, and some of them have real fiscal resources they can mobilize. So I think it's not all bad on the European political front. You also have possibly elections in Germany that could clear the air and hopefully turn the page of the Scholz government, which on Germany has been politically very difficult because very reluctant to really lead this. You will have maybe a CDU-led government in Germany with a firmer hand, I think, and clearer values on how to help Ukraine. So indeed, it is challenging in some parts, but it's also encouraging on others. And of course, just to finish,
what do you
have Nordic. Yeah, go ahead.
Sorry, carry on. To finish.
Now you have the Nordic countries, which, yes, are not, fiscally as big as Germany or France, but have really demonstrated, like Denmark and Sweden, real strength and commitment to Ukraine, and working also with the UK. So I think there are also some points of strength here.
But what do you make of the symbolism of Robert Fico being in Moscow with Vladimir Putin, talking about gas? Europe doesn't know what to think entirely of its future relationship with Moscow. How does Moscow use that transactional relationship on gas to continue to exert influence? How is Moscow going to continue to exert influence in places like Slovakia and in Hungary? How much of a threat does that represent to European unity? These are incredible pictures. You've got a European leader. You don't see this very often. We've got the pictures on screen right now, shaking hands with Vladimir Putin.
Yes, absolutely. And I think Vladimir Putin is enjoying having two useful idiots in Europe, Robert Fico and Orban, Viktor Orban. And we have, unfortunately, to deal with the reality of these politics. But they are not defining how and whether we should be supporting Ukraine, despite the fact that Orban has been blocking a lot of decisions on sanctions, on military aid. We are still able to provide very substantial military aid. So yes, it is frustrating and it is embarrassing, I think, also for Slovakia to see their leader going begging for some Russian gas when we know that Russia has no positive intent towards Europe and only wants to influence us negatively. But I do think there's a silver lining here, which is it's going to put the pressure on the other European leaders to clear their thinking, to have a clearer thinking about exactly what you say. What's our longer-term relationship with Russia? We have been dodging that question for too long, the Biden administration especially. And I think it's important to say, okay, we have to accept Putin is here. Russia is going to be aggressive for the coming decade plus. And even if there is no longer a war in Ukraine, we will still have an aggressive Russia, and we have to design policies around that. There is no going to be return to a business as usual. And I think that's the sort of conversation that hopefully Fico and Orban will unintentionally actually force on European leaders to have stronger and clearer policies towards Russia in the long term.
Fabrice, before we let you go, one story that really came to the fore this year was just how and to what extent Moscow is able to solidify ties with North Korea, Iran and China, and specifically North Korea when it comes to the action on the ground in Ukraine and Russia. Does that theme continue next year? How consequential is that?
I think it is very consequential because this is a form of globalization of the war in Ukraine. In a way, the Indo-Pacific theater no longer starts somewhere in the Indo-Pacific. It starts in Ukraine. And hopefully with the incoming Trump administration, we get that. And we see that this is not just a local, regional war that should be dealt by the Europeans. This war will have and has consequences on what the bad guys in the Indo-Pacific will be doing in the coming decade. So that's why what the US and what Trump will be doing, including vis-à-vis Ukraine and the level of support to Ukraine, will be very consequential for future stability in the Indo-Pacific. So I would say if you want to get a new Trump policy in the Indo-Pacific, especially to contain better Xi Jinping's China, starts in Ukraine.
Fabrice, thank you very much indeed. Fascinating. Fabrice Pothier, CEO of Rasmussen Global and former Director of Policy Planning at Nato. Coming up, reaching a deal, Volkswagen and Labour leaders settle on a plan to cut capacity at its namesake brand while avoiding factory closures. It is one of today's stocks to watch. Stay with us. This is Bloomberg.
Top minutes in the start of trade to the start of trade to the opening trade here in Europe, the day before Christmas. We're looking at markets that are a little soft when it comes to equities this morning. As you can see, futures pointing us a little lower, but not by a great deal. A few things you've got to factor into your thinking this morning. You've got a VW deal, which we'll talk about in just a moment, with unions. We've got this Honda deal coming up. We'll talk about that in just a moment. You've also got some data to fold in as well. We saw the PCE data coming out of the States on Friday, maybe at the margin suggesting that a Fed cuts is a little bit more likely. Is that the right way of interpreting it? Ven Ram, Bloomberg M Live cross-asset strategist, joining us now. What do you read into the PCE data? What does it really mean for the Fed?
Morning, Guy. I don't think it means too much for the Fed. I think, as you said, it's all marginal. You look, I mean, the 2.8% print was softer than what the markets were expecting, but it's not going to move the needle very much for the Fed. Why do I say that? The Fed has penciled in a core PCE of 2.5% for 2025. So, and in the past 2-3 months, core PCE has ticked higher successively from 2.6, 2.7, 2.8. So this is not making a case, an argument for the Fed to be cutting rates. If you take the core PCE at 2.8% and a neutral rate of 125 to 150, the Fed itself has penciled in a neutral rate of 1%, mind you. So I'm thinking it's slightly higher than that, say 125, 150. And if you tack that on to the core PCE, what you get is a rate of about 430, 440, thereabouts, and that's where the Fed is right now. So there really isn't a case for the Fed to be cutting rates at this point unless core PCE falls persuasively, and that persuasive is missing from that argument yet. Guy?
Ven, when we look at next year, I mean, we're kind of working through some of the key themes that could kind of work through the markets in 2025. Is central bank divergence going to be the story of 2025? As we look at over 100 basis points being priced in terms of cuts for the ECB versus, 30 for the Fed, and you have pointed to the caution around that projection as well. Is that the story, or markets mispricing the ECB?
I think that the markets are completely mispricing the ECB, Tom, because let's rewind the tape back. At the end of 2023, this time last year, the markets were thinking 7 rate cuts from the ECB this year. What did we get? We got 4. Next year, they're thinking probably 5 to 6, but I'm thinking maybe 2 to 3, and that's it. Look, I mean, the Irish central bank speaker, Makhlouf, the central bank governor Makhlouf, has just remarked to the FT that people shouldn't start factoring in rate cuts below the neutral rate. And everyone's idea of the neutral rate, if you ask any ECB officials, it will range from 2 to 250. So the idea that the ECB is going to go below 2%, a lot lower than 2%, is just not well-founded. Yep. Okay, there are a lot of risk factors looming on the ECB horizon, but the ECB is not going to cut rates below neutral.
If you believe Makhlouf, and you believe that actually that is ultimately where the ECB is going to stop, doesn't that imply that actually maybe the dollar's getting a little toppy here?
Well, I do think that the dollar is going to be a bit Guy, because, you know, there's this divergence in the US exceptionalism, right? The Fed, as we just made the case, is not going to be persuaded easily to cut rates. The ECB is going to cut rates twice, probably thrice, and therefore I think that the ECB will be, the euro will be offered, and therefore the dollar will be kind of bid for the foreseeable future. And mind you, the yen is also on the back foot.
Ven Ram, Bloomberg, M Live Cross Asset Strategist, thank you very much indeed, with a starkly different view on the ECB versus traders right now. Remember, you can get up-to-date analysis and insight from Ven and the rest of the team. Just go to MLIV Go on your terminal. Let's cross over right now to Joe Easton from our equities team for a view on what stocks may be on the move, with an eye on Novo.
Morning, Tom. So absolutely, we're going to be looking at Novo today. Following that massive drop on Friday, the stock fell more than 20%. That was the biggest decline in 22 years at the close for Novo Nordisk, following that disappointing CagriSema obesity data that showed a lower level of weight loss than expected. And if we put it into year-to-date context, we can see that Novo continues to trim the gains that we saw earlier in the year. At the peak, earlier in June, that stock was up around 100%. It's now only up 26% on a 2-year basis for Novo Nordisk. And we're also watching some suppliers, including Gerresheimer over in Germany, a maker of syringes that supplies into Novo Nordisk. That stock was hit as well, and a couple of others. Bakken and Ipsomed. Those are the ones I pulled out. There's a few to keep an eye on today. Then in terms of the auto stocks, we have got news of that agreement for Volkswagen between the unions and the company, potentially keeping these factories open, also saving VW potentially €4 billion in terms of the cost savings for the firm. Though some analysts say actually that was a little bit less than the company had guided to previously. We can see that stock does need a boost, so we'll keep an eye on that one. There is also the continued news around Renault and the deal over in Japan with Nissan and Honda. That does look to be progressing. Renault is, of course, one of the favourite stocks on the street in terms of autos, so keep an eye on that one as well. Then finally, here in the UK, we have got an agreement between Direct Line and Aviva, this takeover deal. It is going ahead. It's priced at 275 pence a share. We can see Direct Line last close was 243, so there is a bit of upside into that one. But for Aviva, the kind of negative effect is that potentially, according to analysts, this means fewer dividends, fewer buybacks. That is the concern, and that's why we've seen Aviva coming down recently, but potentially we're going to see movements in those. Keep an eye on insurance on the London market today.
OK, thanks to our equities reporter Joe Easton. Top of mind for me is what that means for Guy Johnson and his Bugatti that he's looking to reinsure in 2025.
Oh, yeah. Cars are going to be a focus, though. We are waiting for this press conference that's going to be starting in Japan very soon. So you've got Honda kind of leading that story, Nissan, Mitsubishi Motors. Basically, you're going to have Toyota and then these three as a grouping. It'll be interesting to see how that one trades through into Europe. It's also going to be interesting to see, ultimately, how VW responds this morning. I'm just fascinated. Is the Novo story a kind of precursor, a warning for the AI trade? Expectations are high.
Yeah, expectations are high. Executives have been steering around that. Nvidia's a very different story on many fronts, but maybe there's some echoes. The opening trade starts, of course.
Monday the 23rd, couple of days to go until Christmas, couple of trading days, 1.5 you could really argue until we get into the holidays. In terms of the session today, there's actually a fair amount of stuff going on. We also need to factor in what happened Friday into our thinking as well. Friday was a fascinating session. You get the Novo fade, you get the PCE bounce. That's what you're looking at on either side here of this chart. The US markets faded a little bit after Europe has closed, but not by a great deal. Let's factor that into our thinking. Let's look at futures and show you what is happening there this morning. They're a little soft, but not by a great deal. We're down by, on the 50, 0.4%. The FTSE's down by 0.3%. CAC futures are absolutely flat. There's a number of key stocks that we're going to be watching out for today. We're also going to have news coming out of Tokyo on this auto merger. We've got our own auto news that we need to factor into our thinking as well. I'm really interested to see what Novo does at the get-go of trade this morning, Tom.
Yeah, I know you've got an eye on that in terms of whether or not it's a catalyst more broadly for stretched valuations across some of these big names like Nvidia. There's the redhead crossing the terminal right now on that auto story. We have to keep an eye on what's happening in Japan, and this is a big buyback that's coming back from Honda as a result of this plan to merge with Nissan. The redhead, Honda to buy back 1.1 trillion yen of shares. That's close to 24% of shares, 23.7%. They will be buying back 1.1 trillion yen of shares. They've also announced that Nissan and Honda will be putting in place a holding company which will be listed in August of 2026. Honda will be nominating a majority of directors to that joint holding company. This is a story we keep across for you, of course. Novo Nordisk, meanwhile, in focus, of course, given the rout of Friday. Automakers as well on back of what's happening with VW and an agreement with Labour and unions and Aviva on that deal. Guy.
OK, here we go. Monday's opening trade. Tom, let's talk you through what we're seeing in terms of the price action. I think it's going to be a single stock story, single stock news flow story this morning when it comes to what these markets are delivering. I think at an index level, you're not going to see a great deal. Maybe a little bit of softness. You're already getting an indication coming through of that in the FTSE 100. The Stock 600 is absolutely flat. The IBEX down just a touch, but only a touch. Not really that much price action at an index level. Below that, though, you're going to see some interesting stock stories. So the DAX is going to be an interesting trade this morning. We are expecting upside in Volkswagen. Let's see what that delivers. The CAC is already giving back a little bit of ground. We're down by 0.2%. Is there a read across into the Danish market, which is closed tomorrow, in Novo as well? Lots to look out for this morning. Tom, What's going on below the index surface?
Novo repairing some of the damage of Friday, nowhere near all of it, but you are seeing gains now. It's the top performing stock right now. Novo Nordisk up 4.4% after the rout, of course, on Friday. When it comes to what is happening with the deal-making space, Aviva, of course, agreeing to that more than £3 billion takeover of Direct Line, you're seeing losses of around 0.6%. So we're not a huge move for Aviva. We look at course, at VW, given it has come through with that agreement, at least for now. We'll see if that sticks around the labour unions and not needing to close some of those factories. In terms of the sectors, sector by sector, in terms of the top performance, it is coming through from healthcare. That is the Novo story, up 0.8%. You've just got three sectors so far in positive territory. Banks up 0.3%. On the downside, travel and leisure dropping 1%.
So Novo Nordisk is still down. If you look at the two-day chart, is still down by 20%. So it is gaining this morning. We're up by 5.5%, 5.6%, but that stock is still down by circa 20% on a two-day basis. So when you see that stock bounce this morning, we are not filling the gap that was generated on Friday, which is really worth bearing in mind. We're also watching what is happening with Volkswagen this morning. I'm waiting to see a trade on that stock, so we'll see how that comes through. Talking of auto news, I want to take you to what is happening in Tokyo right now. As you can see, the press conference that we've been anticipating all morning has just begun. We've got Nissan, Honda and Mitsubishi all behind podiums today. Senior executives briefing the press on the details of the deal that will be done. This is just the starting almost of that process in terms of what is going to be happening. But it looks like we are ultimately, Tom, heading towards some sort of a holding company that will house all of these three companies. But it looks like Honda's going to be Honda's going to be in charge of this process.
We know they have, of course, in terms of the market cap, the power lies with Honda. Let's listen in to those executives as they speak there at that press conference.
To begin discussion on its potential participation in the business integration talks and to make a decision around the end of January 2025. Given the necessity of exchanging confidential information, we signed an MOU, which is an agreement to start the discussion and provides a framework for the discussion. It does not mean that business integration is decided. Nissan and Honda will start the discussion from today onwards with an aim to clarify the direction of the possibility of business integration by around the end of January, when Mitsubishi Motors is expected to make up its mind. Today, I would like to walk you through the contents of the MOU and the next steps. Later, I will ask CEO Uchida-san and CEO Kato-san to share with you their thoughts on the latest agreement. As you may remember, Nissan and Honda announced to begin a feasibility study of a strategic partnership back in March.
Okay, you're listening to obviously the dubbed voice of the Nissan president, the Honda president, walking us through the details of the agreement that has been signed. We're going to continue to monitor what is happening here. Craig Trudell is going to be joining us very shortly, who leads our auto coverage globally, giving us a take on what is happening and the results ultimately of this deal for the global auto sector and what it's going to mean and how necessary this deal is maybe to stabilise particularly Nissan. But we're also looking at what is happening with Volkswagen this morning. I'm still waiting to see exactly what is happening. We've got some trade now coming through for Volkswagen in terms of its share price. It's only up by 0.5%. So we're not. Initially, I thought that we were going to be seeing maybe Volkswagen responding a little bit more positively to the news of this agreement that we saw Friday with the unions. But initially, we get a gap. We got to move higher, but then that's faded really, really quickly. And it does seem as if the analysts are quite mixed in terms of their response. Some saying actually this is a good first step. Others saying actually this doesn't achieve the objectives that Volkswagen needs to achieve in order to stabilise its business.
Well, the cost savings, primarily, that Volkswagen executives suggested they needed with that dramatic prospect of up to 3 factories being closed. That seems now to have faded as a likelihood, but there is likely and possibly a cost to keeping the unions on board. So you have some more certainty in terms of the prospects of VW, at least in the short to medium term. The longer term questions, of course, remain for that company. And we have some analyst views as well on this. But so far, as you say, not huge moves coming through for VW. Novo, I know, has been front and centre for you and for the markets and investors in Europe. Novo Nordisk shares, they're up this morning, but as Guy was pointing out, of course, not making up the dramatic losses of Friday. The details, of course, were around this experimental obesity shot that they put so much hope in, CagriSema, which did help patients to lose weight, but not as much as executives had flagged originally. So 20.4% of their weight was lost over 68 weeks, short of the 25% that the Danish drug maker had repeatedly predicted. It is, of course, Europe's biggest company by market cap, and it looks to set to end the year in the red, despite the gains that we're seeing today. Son of Us is in Copenhagen, following the story for us very closely indeed. Sana, where does Novo stand at this point?
Yeah, well, as you saw on Friday, there was a $120 billion loss to its market value in a very short amount of time. A bit of that share of the stock did recover on Friday, and you're seeing it up now again this morning. But as you said, not nearly enough to recover those losses from Friday. Novo Nordisk is really counting on this new drug, CagriSema, to position itself as a leader in the market for weight loss drugs. And the trial results on Friday, well, they really just disappointed investors. And the problem for Novo was that it had promised too much. It had told investors ahead of time that CagriSema could deliver 25% weight loss, and it fell short of that, and it was punished for that.
What is the view in Denmark now of this company? How much criticism is there around CagriSema? What does Novo do next? Like this, as you say, management really raised expectations and clearly raised them too high. And you're now going to see a huge ripple effect coming off a huge move lower in the stock. These are billions of dollars worth of market cap that are being lost. For many people in Denmark, that is going to be a serious undertaking. Many funds, many people's pensions are going to be invested in this stock. How much criticism is management under right now?
Yeah, I mean, certainly as a Dane on Friday, it was very scary to see how much of a hit the Novo share took in such short amount of time. And we would have, every Dane would have felt it on their pension funds, on their investment portfolio. The krona also weakened a bit. Novo Nordisk, well, they are still encouraged by these results. I mean, after all, we did still see a more than 20% weight loss, and they still intend to bring the drug to market in 2026. And I think we're still waiting from some details that Novo said they would release next year around, for example, one thing Novo, they allowed patients to remain on a lower dose of the drug if they wanted to. And a lot of patients did that. And we're kind of awaiting answers to why did patients choose to remain on lower doses. Was that because of side effects? Or was it potentially because they were very happy with the weight loss that they were seeing? And so some of those details will emerge later on, and they'll be very important in kind of the assessment of the future of this drug and Novo's future pipeline.
Sonny, thanks for the updates. It's still a big story this Monday morning. We greatly appreciate the latest. Son of Us joining us out of Copenhagen on what is happening with Novo. Is Novo a warning? Is it a wider warning that we all need to pay attention to? Expectations in a number of key sectors are being raised right now. Charles-Henri Monchau, Chief Investment Officer at Seas Group, joining us now. Good morning. Is Novo Nordisk a pre-shock that the market needs to pay attention to when we think about some of these AI names that we've been watching move up and up and up? Expectations that we've just been hearing got raised by Novo's management as to what was possible, and any disappointment has been severely punished. Is this something that we should be thinking about when it comes to other big names? Like, is this an NVIDIA story as well?
Well, it's a fair point. Obviously, it's a very specific story. But as you rightly pointed out, expectations were quite high. The stock was super extended. It is a major holdings in so many portfolios. So when there are, let's say, a bad surprise coming in, the punishment is quite big indeed, with more than almost 1 billion market cap being wiped out. So let's see. This is one of the, let's say, negative surprises that could come next year. For instance, with the Max 7, can they move from Max 7 to Lax 7? If there are any similar type of disappointment coming, yes, this is the case with most stocks, which are indeed overextended and owned by almost all investors.
sort of potentially the Mag 7 to the Lag 7. Charles, in terms of how that transforms, then where is the if you're rolling out a Mag 7 in 2025, where is that being put to play? And is it your sense that we've seen some kind of complacency then in terms of the stretch valuations of some of these stocks?
Well, there is kind of normal complacency in the sense that if you look at earnings growth next year, these Mag 7, they are expected to grow twice the market rate, so between 15 and 20% EPS growth rates, whereas the rest of the markets will barely grow double digit. That's one point. The other point is also what is happening in terms of net supply. These stocks, they are buying back shares, at a very aggressive pace, which means that the net supply of these large cap in the US is negative. There are more share buybacks than share issuance or IPOs. And this explains why also the PEs are quite extended. So yes, there is maybe over-exaggeration in terms of expectations. There is a high concentration of these stocks in all investors' portfolios. But on the other hand, the fundamentals still seems to validate the case that we need to own that kind of stocks in portfolios.
Well, where the PEs are not looking stretched, if you strip out Novo, are European stocks. What gets Europe back into the portfolio in 2025? Is it the ECB? Do fundamentals start to improve?
I think one of the, let's say, unexpected trigger could be some kind of, let's say, positive political outcome that we are not seeing. Would it be in France or Germany? We have seen over the weekends, there are still a lot of bad news, which means that we are not going to see the kind of fiscal stimulus which is eagerly expected by most investors. And as you mentioned, that means that all of the positives are on the ECB shoulders. When it comes to the markets, yes, with the let's say if you strip out some of these mega cap, which are indeed quite lofty in terms of valuation, the rest of the market is quite cheap, but we definitely lack kind of a catalyst.
Is France investable until we get to presidential elections? Are we just going to continue to see the kind of volatility we're seeing? Another government potentially being formed before Christmas. We wonder how long it's going to last.
Well, it's full of great companies which can become great stocks, but it's kind of, let's say, crazy that we don't see, let's say, any positive news flow coming on the political side. Some government was expected at the end of the weekend. We still don't see it. And what can happen is, let's say, again, a new government coming after Easter, because this one doesn't seem to be lasting more than 3 or 4 months. So a kind of big political crisis could be expected in 2025 in France.
Do you think we need to see early presidential elections? Would that clear the air?
It's possible. That's a possibility for 2025 indeed.
Political instability just seems like it's going to be a theme, though. How should investors be thinking? How are you thinking about the volatility that Donald Trump is going to be creating for markets? He's not even president yet, and we're seeing this volatility being created all around the world. In terms of investors' ability to take on risk in 2025, is Trump going to limit that?
That's a very interesting point, because for the time being, the political uncertainty is not seen in the US. It's seen outside the US, in Europe, for instance. But we have seen some very interesting news over the weekend that can indeed create some waves in 2025 coming from Trump administration. One is Panama, for instance. What is going to happen now with the Panama Canal? Then we have seen some comments about Mexico. So we can see that Donald Trump is probably going to be eager to put his stamp on the rest of the world when it comes to geopolitical leadership, and that indeed can create some waves, not only on US assets, but also, for instance, on emerging market assets.
I can't let you go, Charles-Henri, without. So you've mapped out some predictions, some more likely than others for 2025. Look, we'll let you get back to that Mountain View in a second. But one of your views, low probability, but you've got it out. It's here in black and white. Elon Musk and Giorgia Meloni get married.
Yeah, we have seen that was more than a joke, but we know that they are quite close. And The rest of the surprise was that because of this, let's say, a close relationship, Trump and Musk might start to move from best friend forever to foes. And interestingly, over the weekend, we have seen some comments from Donald Trump saying that Elon Musk is not going to be the president, that he cannot be, he doesn't qualify, by the way, for US presidency. So maybe that could be the early innings of some kind of tensions between the two. Let's see.
Yeah, he talked about a hoax. Charles, thank you very much indeed. Charles-Henri Monchau, Chief Investment Officer at Seas Group. Thank you very much indeed. Have a great holiday in the mountains. The Core 6 looks like this. This is what the story looks like. Clearly, we are watching what is happening on the left-hand side of the screen. As you can see, Novo Nordisk is rising quite sharply. It is up, but still hasn't filled the gap from Friday. Elsewhere, it is a sea of red out there. European markets going nowhere in a hurry. Let's talk about some of those other single moves. We've got Novo, but there's a kind of feed off that story. And Joe Easton's here with the details of it.
So as you say, Guy, Novo is a key focus today. That stock gaining around 7% over in Copenhagen. That is actually the biggest move for that stock since March, so around 9 or 10 months, but still down 15% on a two-day basis in terms of that massive drop we saw on Friday. Some of the suppliers coming back up. Gerresheimer was down around 9% on Friday, a maker of syringes that are used in Novo obesity drugs, seeing a little bit of a gain in some of those stocks, but still all of those sharply lower on a two-day basis. Then in terms of insurers, Direct Line getting a boost. A 275 pence takeover agreement is announced with Aviva. That stock coming up around 3%. But what's interesting for me is it still trades massively below that. We're still 25 pence below the takeover price, and not much of a reaction in Aviva, potentially suggesting a bit of execution risk in that one today. Then in terms of gambling, wanted to bring you Evolution Gaming. Now this one is over in Stockholm, but they've got a big UK operation, and the UK Gambling Commission saying that they are reviewing the company's operations because some of their games have been accessed via Maltese operations that haven't got UK licenses. The company has spoken to our reporter on the phone a few moments ago and said that they are cooperating with this, taking it very seriously, but we can see a drop in that stock. 8% it's declining, the worst performer on the stock 600 this morning. Then in terms of autos, we've got this exciting news around the M&A in terms of Honda and also Nissan. So that one is a little bit weaker, in fact, but we're seeing those headlines continuing to break. And Volkswagen, meanwhile, slipping a little bit after that union agreement, potentially not as much cost savings as expected, according to some analysts, but it is a step forward with that union agreement coming through. Then one sector I wanted to check in on today. Excuse me, we're going to do Energas. That's completely my fault, not the producers. But Energas declining. They have actually done an agreement with the Peruvian government on a bit of a legal dispute, and that one is coming down 3%. Analysts said they were expecting a bigger payout for Energas. It's over in Spain. It's an energy company, a bit of a Peruvian disappointment hitting the stock at the moment. But the sector I wanted to bring you before I jumped the gun there was defence, because there's a story in the Financial Times saying Donald Trump wants to push NATO defence spending up to 5% of GDP for every country involved. And traders telling me in my IB this morning that's why this sector is higher today. Saab is gaining, Rheinmetall in Germany, Kongsberg, Leonardo, all of those stocks among the best performers today, following reports around NATO defence spending. That's a green sector amid that sea of red that you mentioned a moment ago, Guy.
Joe, great stuff. Thank you very much indeed. Yeah, that 5% story, maybe just an opening gambit, but it would certainly imply significant spending coming through from European NATO members. I want to take you back to what's happening in Tokyo. The Mitsubishi CEO is currently giving his views on the potential merger that his business would be involved in between Honda, Nissan and Mitsubishi. So this is the Mitsubishi president that is currently speaking. We'll keep you up to speed with what is happening out in Tokyo with this news that is coming through surrounding this merger. What I think is fascinating as well is that Volkswagen this morning has not responded positively to the news of the deal with unions. In fact, going exactly the opposite way. We'll come back to the auto sector in just a moment and give you the details of what is happening and the global implications of all of it. That's next. This is Bloomberg.
As it provides a source of our competitiveness for the future. The scale of this.
Welcome back. You're looking at live pictures out of Tokyo. Executives from Nissan, Honda and Mitsubishi giving details on this memorandum of understanding that has been signed by and between Nissan and Honda, with the expectation that they will build a merger between the two businesses. Waiting for more details from Mitsubishi, but the expectation is they will have made that agreement by June of 2025. That's the time frame they're setting themselves, and then they will have a holding company that will be listed in 2026. Let's bring in with more details now on this major auto story. It would create the third largest automaker globally. Craig Trudell, our global autos editor, of course. Craig, from what we've learned in the last 30 minutes or so, how significant is this? What for you is standing out from this apparent deal at this point?
Well, I think one of the things I've always been told at Bloomberg is there's no such thing as a merger, right? Someone's buying somebody, somebody's taking over, and somebody's getting taken over. I think in this case, the writing has been on the wall that this is really a Honda rescue of Nissan, right? And so you're seeing some of that come through in terms of who's going to pick the directors of this holding company. Honda sort of asserting itself going into this, buying back a significant chunk of its shares. I think one of the things we're going to be sort of all ears for is exactly, what Nissan has to say about, sort of negotiating some of the particulars around, the complexities of their shareholding structure. What is Renault's next move going to be? And, how exactly, they fit in this future. I think the likelihood is that they will view this as an exit plan for them for that.
When I came in this morning, it was expected that Volkswagen was going to be trading about 3% higher on the back of the union deal we saw Friday. It's not. Why is it not? What is it that the market doesn't like here?
I think when you, follow this going back, months now, this was a management team that was talking about, the need to maybe close up to 3 plants in Germany. The VW brand, as we know, for decades really has been, structurally unsound, a really low margin business if it's making money at all. I think, when you sort of go through this, pitch battle to bring those costs down and get to a place where you can be much more competitive in an increasingly difficult environment, and then you have to pull all the way back from, maybe 3 plant closings to 0. Yeah. I think the market's going to be sort of underwhelmed by that. And, the management team on Friday pointed to, technical capacity cuts, significant job numbers going away by 2030. But, how many of those were always going to go away? This is a workforce that is a little bit, on the higher end in terms of average age. And so, the amount of capacity reduction there isn't what was hoped.
Great stuff. Thank you very much indeed. Our Global Autos editor, Craig Trudell. Lots going on in that space. We're going to be talking about geopolitical stories next. We're going to fold it all into the European economy. That's the conversation that is coming up. These are the European stock stories. This is Bloomberg. Welcome back. 8:30 in London. We're 30 minutes into the opening trade. Let's talk about where we are with European equity markets. A little softer maybe than we would have anticipated at the get-go when I first got in this morning. There's a couple of factors behind that. You are certainly seeing Volkswagen a little bit weaker than anticipated. You are getting a bounce back in Novo, but hasn't filled the gap yet with the losses we saw Friday. So all of that needs to be factored into your thinking as well. Plus, it's 2 days to Christmas. That's probably a factor as well. Talking of Christmas, we still don't have a French government. The expectation was that we were going to be having it last night. It hasn't happened. So the French Prime Minister, who we do know, François Bayrou, running out of time, to be honest, to meet his self-imposed deadline to name this new cabinet, a cabinet that we hope, or he hopes, will survive a vote of no confidence were we to see one in Parliament. So the new government's top priority, apparently crafting a 2025 budget, Bayrou aiming to finalise that by mid-February. But are we going to get this deal done? Are we going to see the contours of this government by Christmas Eve, which is now the new deadline that we're watching out for? Claudia Cohen in Paris joining us now. Claudia, what's the hold-up?
Hi. So the government announcement was supposed to be yesterday, as Macron and French Prime Minister Bayrou met 2 times on Sunday. But now we know that there won't be an announcement before 6 p.m. tonight, as we should recall that today is actually a national mourning day for the victim of the cyclone in Mayotte. So the Elysee has said that it won't be before tonight. So basically, it's either tonight or it would have to be tomorrow.
Okay, so we look at the time frame. Maybe tonight, maybe tomorrow, in terms of getting the new cabinet. What else are you watching for in kind of the days ahead? What is that cabinet likely to look like? What are the priorities for Bayrou? This has to be a cabinet that's resilient.
Yeah, exactly. So what we know now, it's probably the government will have a lot of Macronist veterans, so a few ministers should actually stay. And then obviously one of the biggest challenge for Bayrou is trying to find a minister from other parties. So what we know from the French press today is that probably there would be like a former socialist MP that could enter the government. And a lot of obviously right-wing old MPs also that could enter the government. So it will be a tricky one to make a government more diverse as it was from like the previous prime minister. And also obviously the biggest challenging is to succeed to draft a new budget, because all the markets are waiting for this new budget. And I would say that one of another challenges would be to, listen to what businesses have to say.
You talk to a lot of people about what is happening here. Is there an expectation that this government can last more than a few months? What are people saying in Paris about how long before we need to be going through this again? Is this a long-lasting government, a government that gets us to presidential elections, or not?
Well, to be fair, there is not a lot of trust in that, because, as you mentioned before, like the government could face a no confidence vote as early as mid-January, and the question is really tricky, for Bayrou, because first he needs to try to stop the widening public deficit. But how will he do that? Because the Marine Le Pen's party is expecting Bayrou to make some change to the pensions reform, but the pension reform was voted to in order to close the widening deficit. And then businesses are saying look, you shouldn't impose more taxes on us, because it's already quite overwhelming in France. So the question now would be, where would he find the money, and how would he please the socialists, but also Marine Le Pen's party? So I wouldn't say that French people have a lot of confidence in the new government, and I would say, to be honest, that there is not a lot of hope and not a lot of care also.
OK, Bloomberg's Claudia Cohen in Paris as we watch potentially for the details around that new cabinet, potentially later today, potentially tomorrow. Still waiting for the details, of course, and the key priorities that face that incoming cabinet over in France. Claudia, thank you. Let's get more details in terms of how to think about the political risks for the markets into 2025, and bring in Carten Brzeski, Global Head of Macro at ING Research. Carten, great to have you. Thanks for joining us. Let's start on France then. Do you want to be positioning for more political uncertainty in France? How much risk is priced into French assets at this point?
Well, I think you definitely want to be positioned for more uncertainty, because this is a political game of chicken currently. And even if we get a government now before Christmas, I cannot see that this is a long-lasting government, given the political situation that we have in France. So I would really think that we are heading to new parliamentarian elections next summer after this 12-month deadline, which also means that until then, we're going to have a lot of political uncertainty in France, but also means very little policy certainty, and the second largest economy of the Eurozone probably falling into stagnation.
In terms of just that timeline that you're talking about, does another parliamentary election resolve the impasse that France faces, or ultimately do we need to see presidential elections for that to happen?
Well, it depends, Guy, because it means that Macron would get a second chance to more or less redo what he tried to do with this year's elections, namely to get a majority behind him. So I think if we were heading to new elections in the summer, we have two options. Either the French decide to actually back Macron, and then we would have really certainly a quiet period until the presidential elections. If Macron would lose his majority for a second time next summer, this would obviously mean that I think earlier presidential elections would also be on the radar screen, and also a continuation of political and policy uncertainty in France.
What about Germany, Carsten? Are we underestimating the ability for the CDU, CSU, if they do, of course, win in the elections at the end of February? They'll have to form some form of coalition. That's the expectation. Are we underestimating the ability for them actually to be flexible on the debt brake?
Well, very interesting. We had the Minister of Finance, Mr. Cookies, over the weekend. Well, he's from the Social Democrats, talking to newspapers saying that a reform of the debt brake was highly urgent. So I'm still thinking that we will get some changes to the debt brake after the elections. And whether it is outright reform of the debt brake, or whether it just means, some more flexibility, maybe some special purpose vehicles, it doesn't really matter. Because I think we now see a growing consensus across the political parties in Germany that there is a high need, there is a high urgency to invest more. And this won't be big time spending, but this really will be more positive fiscal stimulus in the second half of 25 and then also in 26.
How much of that is going to be a reaction then to the pressure coming through from the Trump administration? To what extent is this a theme more broadly across Europe? We talk about the targets around Nato, but the ability for governments to fund those targets in 2025, is this where the rubber's going to hit the road?
I think this is what the French and the German examples are nicely illustrating currently. So there is a big need for investment. There is, when you look at society and people, very little appetite for austerity and for cutting expenditures. At the same time, you mentioned defense. I would also add infrastructure, digitalization, education. So there's a long list of investment needs across Europe. And we only have one country which really has enormous fiscal space, and that is Germany. So what I would expect for 2025 is first a couple of months with policy and political uncertainty, because we really need to wait until we have the results and the formation of the next German government. But then in the second half of 25, hopefully a rebound with fiscal stimulus coming out of Germany, and the rest of Europe would benefit from it as well.
Carsten, we're looking at defence stocks on the screen right now. They're all up on the expectation that Donald Trump is going to push through a mandate that is 5% of GDP to be spent on defence. How realistic is that? Can Europe afford 5% if it wants to fund social security, if it wants to fund infrastructure? Can we do 5% as well?
Well, I think everything is possible, Guy. I think how this could play out in the end is either we're going to get some kind of European defense fund, so common European borrowing to pay for defense funding. That is clearly one. The other thing is that the European Commission gives a bit more flexibility when it comes to the fiscal rules and will exclude defense spending from the European fiscal rules. The other question I think Europe should ask itself, even if they were to go for 5% of GDP on defense spending, do they actually have the production capacities? And the answer is no. From the defense spending we had already this year and last year, I think 70% of European defense spending did not go to the European defense industry, but did go to the US.
So we need to do that domestically. But in terms of the priorities, where do you think defence sits? Is defence more important than the green transition? Is defence more important than social security spending? Is it a zero-sum game? You kind of imply that maybe it isn't, that there's greater flexibility around borrowing. But I wonder whether actually the markets will tolerate that from countries that are already running significant debt-to-GDP ratios, north of 100% for a number of countries. Are we okay with that from a market perspective?
That's correct, and this is the biggest argument in favor of doing this at the European level. When you look at the entire eurozone, and the entire eurozone debt to GDP ratio is still below 100% of GDP. So this is clearly less than in the US. But we do have a couple of countries where debt levels are above 100% of GDP. So clearly, if we had to step up spending, and I cannot see that it will come at the cost of social spending, in all honesty. So this means some kind of European solution. This means some kind of European defense fund. Never, as we know, Europe will never come with a big bang, but probably some kind of transitional period to move into a European defense fund. And at the same time, try to combine a little bit of austerity with more investment spending. And I could see also more flexibility from Brussels coming to show that countries are allowed to at least increase their investment in infrastructure, because that would be a nice, specific target for investment and no government consumption.
Okay, so possibly some flexibility from Brussels, possibly from more spending from Germany and any new government there after February. When it comes to the UK, we've had some reminders today, Carsten, of the fragility and the challenges around the growth picture of the UK, despite the pledges, of course, of the Chancellor, Rachel Reeves, to get us growing. Is the BOE, with its caution, setting itself up for a policy mistake?
Too early to tell, in all honesty. I think what the BOE did now is more to follow at least the thinking that a Fed and also an ECB are seeing, namely that there is still a significant inflation risk left in the economy. So therefore, they decided to take it a bit more easy. Does it mean that they can, withstand with no further rate cuts? I doubt it. Because if the European economy, what I would expect, really goes into further stagnation, especially in the first half of next year, if the US will really engage in the modern version of industrial policies, so I cannot see how the UK economy could really escape this dance and would also start to slow down. If this is going to happen, the BOE would quickly pick up the pace in terms of rate cuts again.
What about the ECB? Are you comfortable with where the ECB is right now?
I would have liked them to do more in December, in all honesty, because I think we saw that in fall, the ECB tried to get ahead of the curve. Trying to get ahead of the curve also means they could have done 50 basis points in December. Inflation currently is not an issue. I'm a bit worried that the ECB is still too optimistic with its own growth outlook. And once we see that growth does not do what the ECB currently expects it to do in the coming month and quarters, I see the ECB really cutting interest rates further and at least see them going to 2%, probably slightly below, by the summer of 25.
Carsten, great to catch up. Have a happy holiday. We always appreciate your time. Thank you very much indeed for sharing some of it with us this morning. Carsten Brzeski, Global Head of Macro, joining us from ING. I want to take you back to Tokyo. Quick look at what is happening there. We have this ongoing press conference between Honda, Nissan and Mitsubishi. The current lines that we're watching coming out right now, and this is the Honda CEO that's speaking. These brands will continue to coexist, he is making clear. Honda and Nissan to continue to coexist. They will develop brands equally, though, the brands equally. But it will be a Honda-nominated director to helm the joint company. Tom, it was interesting. We were talking to Craig Trudell a few moments ago. He was saying one of the lessons you learn at Bloomberg is there's no such thing as a merger. Somebody's always taking over somebody, and in this case, it feels like it's Honda taking over Nissan.
Honda has the clout in this relationship, and we're speaking, of course, about the board positions that Honda's going to be having. So they're going to have that leverage, it seems, on this board of this holding company that, again, they expect to be taking form from June of this year before listing in 2026. The role of Renault as well was interesting, given that it has a 35-36% stake still in Nissan, and how it looks to unravel some of that. Some of that stake held in a separate entity, some of it can wind down.
One factor we haven't talked about is Honhai. So there was some talk of Honhai potentially, Foxconn being involved in this process and maybe looking to take out Nissan. You wonder why that would happen, but you do wonder whether there's a role, once this process has unfolded, maybe even before that, for that to be put into the mix as well. Maybe some third-party manufacturing, thinking about how the software is going to work, thinking about how some of the technology is going to work. You do wonder whether this is the complete article here, and whether there is actually others that could join in to this deal.
And Honhai and Foxconn said, look, they're going to sit it out for now and see how things shape up until June. But you're right. Look, this was a company that had aspirations at one point to build the Apple car, and there was all sorts of reporting around that. Now it seems they were looking, at least continue to look at Nissan, though they're staying on the sidelines. So Foxconn and Honhai's aspirations in terms of building out a platform for autos as they become increasingly electrified is pretty interesting development to watch as well.
So we'll watch that and see how that development plays out too. So there's a lot going on here, and it does feel as if there's a lot of kind of details that ultimately need to be filled in, a lot of blanks that still need to be filled in here. We'll continue to monitor that press conference that continues to take place in Tokyo. We'll come back to that, maybe, if required. This is Bloomberg.
Welcome back. Now, Poly AI produces AI voice assistants for call centres. Recently secured a valuation close to $500 million, raising $50 million in a funding round from backers, including Head Sophia and N Ventures. I spoke to Nikola Mrcic, the CEO and co-founder of Poly AI, about recent growth and the adoption of the technology.
Oh, absolutely not. I think that people are confusing two things. One is there is like the first wave of kind of like people buying chips and GPUs to kind of like fuel their future growth. And then in parallel, there's like a story of even greater exponential growth just from a lower base of enterprise adoption of AI for their workflows, for their customer service, sales, and many, many other things. So in our case, growth is like a lot higher. I think like NVIDIA kind of like, share price falling is just because people have gotten used to them like so wildly exceeding their expectations. But really, I mean, it is the most valuable publicly traded company. And I don't expect anything changing because wherever we see wins in AI, the house always wins. And they, at the moment, are so dominant that I don't see a reason to be pessimistic about their outlook.
OK, the house always wins. And they're a backer of you. What is that relationship like, Nicola? How important is that relationship? Do you get better access to compute as a result of that access? How close is that relationship with NVIDIA?
It's pretty close, yeah. I mean, like, it means that we get, like, access to compute. It means that we're just able to kind of, like, work with them on their further strategy and, like, work on models, data, integration, all of that stuff. So it's a pretty important relationship, and they're the company when it comes to this space, that NVIDIA and the hyperscalers. So for us, it's super important. And, as we drive our adoption of these models for the enterprise, I think we are that translation layer between, what people see and expect when they, from the initial reaction to ChatGPT and onwards, and then on to there's just a bit of time lag while we kind of translate that into huge ROI for the enterprise. Now, I think that a lot of companies are doing really well. We're growing incredibly fast. I think it's just a matter of kind of allowing smaller companies like us to reach a scale where you see a greater impact in society as a whole. But, we take hundreds of millions of calls a year, and these are nearly human-like interactions where most people don't even know that they're speaking with artificial intelligence.
Yeah, so you're breaking down that barrier, because it can be, we all know, it can be deeply frustrating, can't it? To be on call or on hold at a call centre, whether it's an automated voice or a human voice or the wait time, and you're trying to break the back of that frustration.
Absolutely. Look,
what is the potential market? What is the Yeah, right. Okay. So, are you breaking? Do you face resistance from clients who say, "Look, we don't need another voice bot. It just really annoys our customers." Do you face that pushback? And how big is the total market size?
So, okay, the market size. Look, there's $1 trillion of labor spent between Western Europe and North America on contact center labor. You look at CCaaS vendors, the leading ones. In total, they make about $10 billion of revenue. In the whole narrative of software eating the world, they've captured 1%. We need to seriously eat into the labor. Now, COVID and onwards, we have a crisis of customer service in Europe, in America, around the world, where companies are just struggling to meet callers in the channel of their choice. And look, that's voice, by and large. It's 70-75% of all customer service contact, despite all the pushing towards digital chat, web, email. People prefer to just pick up the phone and call. Now, you're right. Customers, well, they don't say that they don't need a voice bot. Customers want to do the best job they can for all of their coolers and consumers, right? And we're helping them become the best version of themselves. Is there skepticism? Is there hesitation? Yeah, absolutely. I think especially in North America, where that first generation of voice IVR has disappointed and frustrated people for more than a decade, what helped is the new generative wave and people's belief that we can now do a lot better. And we're doing a lot better, right? Across all of our deployments, we improve CSAT and NPS scores relative to the starting human base. This doesn't mean we'll automate everything, but it means that a solid 50 to 75% of all interactions you have with a contact center in the future will be happening with voice AI, and they'll be better for it.
Nikola Mrcic, the CEO and co-founder of Poly AI, which is backed by NVIDIA, speaking to me here in London. And it's a reminder of the challenge that SoftBank and Masayoshi Son face as they build out their expectations, their ambitions to try and compete with NVIDIA. NVIDIA acting as a VC on some levels, investing left, right and centre in companies that are in the startup phase around artificial intelligence, but also not just the hardware, but the software component as well, the CDU or CUDA software that NVIDIA has. But Masayoshi Son has set up these ambitions.
It's a great big take on the Bloomberg talking about this today, worth a read. Kind of feels like A, late to the game, and B, has got some serious competition. And as you say, everybody seems to want a piece of the pie right now. But I keep coming back to this story that we saw Friday and what happened with Novo Nordisk and elevated expectations. As you were saying within that interview, the house always wins. Certainly that seems to be the trade at the moment. Does that change in 2025? Are we going to see more volatility, more nuance in who is going to be the winner, who's going to be the loser, how this stuff's going to be used? It's interesting that also people are bailing out a little bit on the nuclear trade right now, which is a key component to all of this on the energy side.
How does it shake out? Is this put to more of a test in 2025? And some of the energy stocks have performed better in the last three to 6 months. Is that part of the story as that continues? Yeah, certainly. Nuclear has been challenged. Other energy stocks have benefited. That's a clear blockage to the build-out of this technology.
I think it was Microsoft said the other day, we're not chip constrained, we're energy constrained. Yeah. And that continues to be one of the big narratives here as to how AI develops. How much power can you actually plug into the systems and get these chips to work? Because, they're getting better, but they're still consuming an awful lot of power.
Power and data.
Yes. Two things that goes. That feels like it should be a sort of Bloomberg show, doesn't it? Power and data.
Maybe we just landed on good branding.
That's a great bit of branding coming up. Obviously, it is Christmas in a couple of days. We've still got a few things that are coming up this week. The thing that stands out for me is Ueda speaking midweek. Just pay attention to that. The Japanese news flow continues thick and fast. Right in the middle there, as you can see, the BOJ governor. That could be an interesting little story to pay attention to. Anyway, coming up, we've got The Pulse. I will be continuing the conversation in that show. Tom is wrapping things up. We'll both be back tomorrow. Look at that lovely day in London. This is Bloomberg.